If you haven't been trading for multiple years, understanding how price is moving on the chart can be fairly difficult to say the least, and a lot of beginner traders are struggling to understand why price keeps turning down at certain areas. And in this video I'm going to show you guys how price moves, and it will all make sense by the end of this video, I promise you. But the first thing we need to understand is our main objective. What are we trying to look for and achieve while we are trading? Okay, so we are looking for high probability setups. We don't want to take any trades. We want to take the only trades that have the highest probability of succeeding, and these would be your two-legged pullbacks at the key entry point, trend line, resistance or support line, or exponential moving average. I've just added the 21 bar EMA, and this is a supportive indicator and it serves as a key entry point. Okay, it will all make sense. You're already starting to see that price keeps turning down off this exponential moving average. So before we start trading, because I would enter my chart somewhere around here, this would be the pre-market session that I would see, and I need to make sense of this, what's going on in the chart. So what I'm going to do is, I see a big move down, so I'm going to draw my trend lines around it. Why? Because I want to follow trend line rules. After price will break the trend line, traders will attempt to create new extreme, and since price keeps making new lows, new lows, new lows, there is a bigger pattern in play always. So once you see price moving to new extreme, look for bigger pattern. The bigger pattern I found was a pattern something like this. This was the pattern that I was looking at, and right now that we combine this trend line and the EMA, it's starting to all make sense why the price keeps turning down. It is not too complicated, but we just don't want to take any entry off of these key entry points. We want to combine it with two-legged pullback to make it high probability as we can. Okay, so let's start counting and looking for second entries. Let's say we're going to start count from here because this is still extremely early. So let's come from here. We have a new extreme right here, and what I'm going to do, I'm going to draw my shortened trend line, because not only am I looking for bigger patterns, I want to make sense of the shortened corrections as well. They play out the same way as the bigger patterns. So I have a break, new extreme, and take a look. There are two legs to the key entry point, and we have a first entry short, pullback, second entry short. We're at two key entry points. This is a high probability setup. Okay, and market keeps pushing lower and keeps pushing lower. And look what we have. We have a new low right here, and we're starting counting over. So what I'm going to do, once again, I'm going to draw the shortened trend lines. We have a new low, and we have a just first entry at the key entry point. So this is just a first entry. This is not a high probability setup, but take a look where it bounces. You have an EMA and you have a trend line, and this is a nice bearish bar. I will mark it as a slightly aggressive setup because the overall context is so strong here. We are pushing to the downside. There is no denying the market is in a strong downtrend. We're only looking for reasons to sell. Don't look for longs until you see a break and a new extreme of the market. Okay, but what is important here, we just reach and bounce off the key entry point. Once you bounce off the key entry point, we can be looking for failures, for traps, and these traps are failed second entry longs. Yes, we've heard correctly. We're not going to go long. We're going to use it as a trap because a lot of traders are going to pick bottom too early. And this is the new high. We have a first entry long, pullback, second entry long, failure. Where at two key entry points, big bearish bar, high probability setup. We have a new high right here. We have a first entry long right here, pullback, second entry long right here, failure. But you're far away from both key entry points. You sit on your hands here. But you guys can see second entry shorts with the trend are high probability. Failed second entry longs against the trend are high probability traps. And once you keep getting away from key entry points, just sit on your hands. You see that the market is pushing over, but you want to have the highest probability setups as you can. This is where I started trading. So what did I do first? I draw this shorten congestion because you guys can see price is stacking sideways and you don't want to trade this. Most breakouts of these congestions will fail. This is why I drew this tiny little trading range, but overall structure is to the downside. So this is all I'm looking at. So what I'm going to do, I'm going to do the same thing. I'm going to draw my shortened trend line just like I did all the way down here. I'm going to be looking for all these things. I'm going to be looking for first entry short, pullback, second entry short. I'm skipping the first entry because you're above the EMA now. You're not even below EMA right here. You're only touching the trend line, and this is just a first entry. So this would be very aggressive. Once market created a second entry short and a lower high, this is now a high probability setup because all you see is this, and you have two key entry points, strong downtrend and a nice bearish bar. Remember, context is bearish, we have a key entry point, and the behavior is bearish. Unfortunately, I missed the trade here. This easily would have worked for a scalp, and it worked for a scalp because we are scalpers, but the signal bar was really big, and I would have to put my stop loss above this swing, so I would have to go, this is 5-point stop bar, okay? So once I placed my limit order down here and market went out without me, I had to cancel the limit order once price reaches the scalper's profit, my target profit, because the profit has already been reached and I don't want to leave my order in the market, okay? And I want to add just a little bit. The majority of these bars are just really big, and you have to go and scalp 3.5 points. You have to go and scalp for 8 or 10 ticks, okay? You cannot scalp for only 4 ticks, because one single losing trade will wipe out 4 of your winning trades. You cannot be long-term consistently profitable like this, okay? You have to adapt. You can start with 6 ticks. That's how most traders like to start when they transition from 4 ticks to 8, because if you've been trading for 4 ticks, scalping for 4 ticks for the majority of your trading career, you developed a habit being really quickly in and out of the market, and a lot of traders can't handle the pressure staying in the market for the entirety of 8 ticks. So 6 ticks is a very good transition point before you move to 8 ticks. But 8 ticks, really, once you learn to read the price chart, you understand that all these high probability setups work at least for 8 ticks. Okay, and now that look what price did. We just have our first downtrend, first break, and we're looking for a new extreme. Okay, because we're following the trend line rules, and once again, the context is bearish. This was my first trade that I took, and I didn't get left behind here. I treated this as a 2-legged pullback. We have a first leg, pullback, second leg, and take a look how really bearish the market looks. This is looking extremely bearish. You have no idea that we're not going to make a new extreme. You're far away from EMA, perfect bearish reversal bar, great entry to take a chance on, okay? And market kept pushing lower and instantly reversed higher, and I was caught off guard by this a lot, okay? Because you're expecting for price to create a new extreme. Okay, so what I'm going to do when price keeps pushing lower, and take a look, guys, we just have a break, we're expecting new low, but we want to jump on a safe entry. And what will be the safe entry? Failed second entry long, okay? Remember, we are in a downtrend, so failed second entry long, that's the trap. We have a new high, first entry long, pullback, 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 we're below EMA, great, second entry long, failure. But look, you're far away from EMA, and you're going short directly into this trend line at the very low of the move. I keep telling you that the best reversal patterns are the ones that you keep touching the EMA and you haven't moved so far. So if you took a chance here, that's okay, because you're expecting a new extreme. But remember, this is a very sketchy reversal pattern. You're far away from EMA and you cannot go short directly into this trend line at the very low of the move. But market bounced, and once market keeps bouncing, I have to adapt. Even though I wait for a new extreme, I cannot argue with the market. Okay, so what I'm going to do, the same thing I did right here. I'm going to look for bigger patterns. Okay, it all acts the same. And what's the bigger pattern? Well, there are multiple ways to draw it. First, I was looking at something like this, but it doesn't fit here and it doesn't fit here, so this is out of the question. Then once we form this swing, this is what I was looking at, but this is not right either. Why? Because you already started way too late. You cannot left behind this entire price action. What it ended up being? It ended up being something like this, because this fits the best of these two highs, okay? This was really hard to find the trend line, so don't worry about this. The important thing is the market is pushing higher, because we don't have a new low and we didn't come even close. And market just reversed. You don't argue with the market. You have to adapt. Nothing is ever perfect in price action, okay? And market pushed strongly. So what I'm going to be doing here, we were looking at failed second entry longs, but mainly you're looking for second entry shorts. Remember, 2-legged pullback at the key entry point. We're doing the same thing, but on a long side. So I'm going to draw my short-term trend line, the same thing I did right here. I'm going to be counting. We have a new high, first entry long, pullback, second entry long, and look how it worked for a scalp. However, the signal bar is extremely bearish below EMA, so there is no entry. You have to see on your hands here, okay? But this is how you act. Once again, identify the context. Context is bullish. Find the key entry point, We have an EMA here, and what is the behavior? We have a bullish bar right here. Okay, this bar was fairly bearish. The next bar is bullish though, but overall, a lot of stims and not really great signal bar to end. You have to watch it go without you. And look how price action acts. You have a downtrend working lower, you have a break, and a new extreme. Okay, and there are multiple legs inside a two-legged pullback. There are two-legged pullbacks inside of a two-legged pullbacks. This is why second entry is so powerful. I drew this congestion because it's a smaller trading range, and most breakouts of these congestions will fail. Just like I was looking at it right here, I'm looking at this right here. I don't have the trend line yet. I just know that we keep pushing above the EMA, and downtrend played out with the break, new extreme. So downtrend is over, and we're breaking below the congestion, and most breakouts of trading ranges will fail. I tried to go long here. This trade happened so quickly. I got left behind in like 10 seconds. Market reached the target profit, and I didn't take the trade. It's extremely fast market today. It's incredible how fast the market was. But hopefully you understand how to look and how to trade for the charts. We're looking for second entry shorts in downtrend, second entry longs in uptrend. We're drawing the short-term trend lines, and this is just a little bit advanced trade because it's a failed breakout below the congestion. But it's set up the trend line now, and market keeps pushing higher. However, there we have a new low, first entry short, second entry short, far away from EMA. You already moved too far. Let it go, okay? So at this point, I'm just one trade, and I'm going to share with you this trade right here. This was the trade that I took, and I got very lucky that I managed to have a winner right here. This was probably the trade that the emotions got best of me because since I've missed two very nice easy trades, I kind of pulled the trigger here way too early. This is by no means a high probability setup. Why? Because this is new high. This is just a first entry long. You're below EMA, and the signal bar is not great either. I like the bounce off the trend line, but it barely worked. Actually, there was a lot of room to work, but this is not a smart trade to take by any means. A market reversed lower, and now you have two conflicting beliefs. Okay, you have a break of this uptrend, so you're expecting a new extreme, but at the same time, this new extreme of the downtrend has not been retested. And if you take a look at the 5-minute chart, 5-minute chart look extremely bearish. So it only makes sense to be looking for shorts and not be thinking longs. Okay, so once market pushed above the EMA from this trend line and it failed, it gives you information. Okay, when you keep bouncing off the trend lines, take a look. Bounce here, bounce here, bounce here, bounce here, bounce here. It is generating big moves down. Here it didn't generate the big move down, and the market reversed. Good sign. Here the same thing. It didn't generate big move up. It reversed, so the market is reversing. You can tell how weak the market has been right here and how weak the market is right here. This is telling you that the market is reversing. You're no longer making these gigantic moves. Okay, this is why the market is reversing. You have a new low right here. You have a first entry short, pullback, second entry short, big bearish bar. But to be honest with you, this is looking very messy, and it is better to be patient. Patience is the most important trade that you can master, and especially on a fast day like this, you want to really be patient. But you can see that the price keeps forming in a geometrical pattern. Okay, you can keep drawing the trend lines. You're gonna keep drawing the trend lines, but this is really choppy. This is looking like a consolidation, but you can see price keeps moving in a slanted way down. So you're going to draw this trend line working lower because we're not going higher. The 5-minute chart was very bearish. We cannot make it higher above the EMA multiple times. Take a look at the resistance, how you cannot break 4 times. You cannot break higher, but you're being patient here. And market is reversing into downtrend. So what you're going to be looking at? Well, the same thing as you would be looking like right here. Second entries at the key entry point. And what do you have? You have a trend line working higher. You have a break, new extreme. You have a new low, first entry short, pullback, second entry short, but you're not quite touching the trend line, and this big bar was way too big, so you have to skip this trade because you're not touching the trend line. This bar is way too big, and you're still close far to above the EMA. And then you have this bar right here, and by this time you're touching the trend line, but I still think this is a little bit too aggressive. But once you trapped everybody going along right here, you tick one tick higher and instead of reverse down. This is a gorgeous trap. This is more advanced trade. You have the nice trend line right here, but you have to understand that the trap, everybody got trap going long right here, after, so far away from EMA. One tick higher, instant reverse down. The uptrend played out, and it is a form of second entry because you cannot take this bar, and this bar would have worked, but it's still too early in my opinion. And what are you looking again? The same thing you was looking right here. Second entry shorts, felt second entry longs. Take a look, second entry short, and how the important key entry points are. And market just kept pushing lower, and once you keep getting away from key entry points, that's where you want to sit on your hands. And take a look what you have. You have an overshoot. An overshoot a lot of times lead to a break of a trend line on the other side, or possibly straight up reversal. Okay, you have an uptrend working higher, you have a new low, first entry short, second entry short, but you're nowhere at the key entry point. You're still in this uptrend, so you skip this. Plus you have the overshoot, you have a break, new extreme, and a big bearish bar off the key entry point. Nice entry to take a chance because the uptrend played out with the break and a new extreme, and you're off the key entry point in a downtrend right now. Okay, even though you have an overshoot right here, it is very close. You broke the trend line, you pushed back, and this is such a nice bar to take an entry on. Why? Because you have a break and new extreme. Okay, because a lot of times overshoot will be so strong that you will just keep working higher inside of a trend line, and you will not have a break and new extreme. So once you have a break and new extreme, you have to respect it, and you have to pay attention here, and you have to pull the trigger right here. A market, you know, overshoot is so perfect. The price action just is remarkably accurate. Whoops, why cannot let me drag this? You ended up creating a break, additional break, and a new extreme, and this is now a first legit break of this bigger downtrend. So you're waiting for a new extreme lower. Okay, and this is the new high. You have a first entry long failure, second entry long failure, big bearish bar. After the uptrend played out in a downtrend, you have to take this entry right here, and market created 2 legs to a new extreme, and we have so much price action that I'm not even going to commentate the rest, but hopefully it makes sense how you're looking at. You need to learn to understand this in hindsight, so you see the price action act real time. All right, so hopefully this was helpful. This was fairly difficult price action around here. I thought it was going to be easy day once I saw this, but we unfortunately ended up going into this mess right here, and it wasn't too easy, and the price market was really fast, so you got left behind on a lot of setups if you were using limit order just like me. But remember, study the charts. If you study it long enough, you will start seeing it live. It is remarkable how nicely it works. Okay, so hopefully this video was helpful. If it was, hit the like button. I appreciate it. Subscribe to the channel if you are interested in day trading. And I'm going to see you guys in the next one. Take care, buddy.